Here's 4 reasons I'm extremely bullish on the crypto market right now. Hi, my name's Josh with Crypto Y'all. I do about 3 to 5 hours a day of crypto research and capital allocation. So if you find this video helpful, give me a number 5 in the comments and share it with a friend. Number 1, Bitcoin has broken out of this crazy range that it's been in between 62,000 and 72,000 for the last several weeks. It got above 74,000, even touched 76,000. And now what we're seeing from the market is that it's not willing to panic the moment the price starts to dip again. A lot of traders and bears are caught off sides in a meaningful upward momentum in the market. With over $115 million of liquidations, short liquidations, in just 1 hour. That means that the market caught a meaningful number of traders leaning the wrong way. Basically, the market is starting to accept that this breakout attempt is more serious than the previous ones. And now that $75,000 zone is where the real battle lies. So we want to break above that sooner than later. It's a huge psychological border to cross. Number 2, while retail has been hesitating, institutions have not. Big money has been buying to the tune of over $600 million of net inflows just in the BlackRock Bitcoin ETF in 1 week alone. We've seen 8 straight green days from Bitcoin. I think the last time that happened, Bitcoin did something like 240% in the next few months. Now, I'm not calling for a 240% move from Bitcoin. I think things are a little different, but it should demonstrate how important institutional buying is now for the floor prices of this asset. Since February, Circle, the organization that mints the USDC stablecoin, the largest stablecoin outside of Tether in the world, they've minted $8 billion of USDC since February. This is not retail investors buying crypto on a phone. This is serious capital preparing for market access. And side note, in terms of institutional behavior, the Ethereum Foundation, right? The original operators of the Ethereum movement have started staking Ethereum rather than selling it. It's just another sign that institutional infrastructure is continuing to build, and that staking is a behavior mechanism that shows how institutions aren't wanting to part ways with their assets. Rather, they want to make sure they're ahead of the curve even while sentiment remains weak. Number 3, the Federal Reserve is stuck in their policy decisions. Now, this one might seem counterintuitive, but hang in there with me. The Federal Reserve is the largest central bank on the planet, and investors watch what they're doing in terms of fiscal policy. However, right now, we have inflation cooling, and one side of the aisle politically is really mad at the Federal Reserve for not already cutting rates. But the other half of their mandate is they've got to make sure that employment stays in check. And while employment under the hood is really way worse than people understand, in terms of the Federal Reserve and the way they consume data or measure the metrics, it hasn't really deteriorated enough yet to start cutting, at least in a meaningful way. So in other words, the Fed's stuck. They can't really step in and save risk assets, save Wall Street, save crypto with this rate cutting, loosening policy. But at the same time, whatever upside we're seeing right now and will continue to see means that it's coming from structure and real inflows and not just this sugar high policy hope. It's kind of like getting healthier and losing weight just because you're exercising and eating the right way instead of maybe taking a shortcut or doing some kind of fringe diet that works for a little bit, but then it kind of wears off. We want to see a material underlying buyer's market stepping back in without the synthetic help of a third-party agency. And if you look at the charts, just literal numbers, Whenever the Fed is paused and not necessarily intervening, whether they're raising or cutting, paused rates are typically great for markets. Number 4, despite World War III fears, despite Strait of Hormuz, despite oil prices in the headlines and your neighbor all of a sudden being a geopolitical oil advisor for the Saudi princes, crypto and Bitcoin are melting upward. And if you've been in bear markets in the past, you've seen things like massive central exchanges going bankrupt, massive players in the market going belly up, and retail completely getting decimated, and entire swath sectors and industries within the crypto asset class just vanishing almost overnight. That's not what's happening right now. If anything, those organizations, those vanguard leaders in the crypto market are more solvent and structurally more sound than ever before. A lot of this has to do with proper regulation, pro-crypto regulation, specifically here in the West. And what's happening is smart capital is moving quietly, or at least more quietly than the crowd, in an effort to position itself in the high-performant asset class called crypto. So the question is, can Bitcoin sustain this breakout? Can the overall markets absorb the rising short-term energy prices? Bottom line is, if you're an investor, especially a crypto investor, you have to look out for structure and not noise. Most people are distracted by the noise of the markets. That's usually because they're investing alone. If you're watching this video this far, it's probably because you're desperate for alpha and information and kind of going to the next level as an individual investor. But it's really hard to do that when it's just you, ChatGPT, a bunch of YouTubers and TikTokers, and this vortex of information called Google. Be careful out there. And if you're not part of a community, find one. Find one that shares your core values, that maybe the members are in the same stage of life or have been in the same stage of life. Maybe they're a step or two ahead of you so that you can learn from them. And combine that community with a fantastic framework, a strategy, something that you're not going to figure out just because of osmosis. Before you invest another dime in a meme coin, make sure you at least invest in yourself. And if you'd like to do that with me, go to cryptoyall.com, watch the 12-minute overview video, and if you like what you see, schedule a one-on-one video call with me. And remember, give me a number 5 in the comments if you found this video helpful, repost it, bookmark it, share it with a friend. Like and follow for more.